Asian Financial Forum's theme, Asia Reshaping the Global Agenda, and its major sessions, rather like the reportage of WikiLeaks, promised more than they delivered to the more than 1,600 delegates gathered in Hong Kong from around the world.
Hong Kong, with its open markets and free flow of capital, is taking this opportunity to bridge China and the rest of the world. Increased participation of mainland companies in our markets has prompted some suggestions that Hong Kong is becoming more Chinese and less international. In fact, Hong Kong has become a more global marketplace. Mainland companies listing in Hong Kong comply with our international standards, which attracts foreign investors. Overseas hedge funds and private equity firms have been setting up in Hong Kong in droves. These international firms are keen to invest in mainland companies listed in Hong Kong or invest directly on the mainland. As China's global financial center and as an international business hub, with free flows of capital, information and talent, Hong Kong has been fully engaged in Asia's full circle back to economic growth and prosperity. Today, our region has an opportunity to reshape the global agenda. We must continue linking traditional markets to new ones.
After Hong Kong's Chief Executive Donald Chang anchored the opening and set the scene, we were treated to an impressive group of speakers, panellists and chairs, dishing up quite a lot of data that, while repackaged, we've all seen, heard or read before. The Brits in the audience were treated to a sell for their new government, as UK Secretary for Foreign Affairs William Hague did a great PR job on his government's return to a global focus and a preparedness to cross borders.
So in our first 9 months as a new British government, we have started a wide-ranging initiative to broaden our ties with the Gulf states in diplomacy, defence, trade, culture, education and health. We have called an end to Britain's retreat from Latin America. We have set out to reinvigorate our ties with Japan. We have called for a new special relationship with India. And we have launched a new partnership for growth with China. After I leave Hong Kong on this visit, I will be the first British Foreign Secretary to visit Australia and New Zealand in nearly 20 years. We are hard-wiring a commercial focus into our foreign policy so that we become even more agile in cultivating the relationships that Britain needs to prosper well into the future.
Australia's Assistant Treasurer and Minister for Financial Services and Superannuation Bill Shorten and his fellow panellists held down the policy dialogue session. But while the topic, promising in itself, was all about challenges to Asia, it was more a show and tell session of how they all, and Australia in particular, rode out the financial crisis.
In Australia, whilst we don't have numbers equivalent to some of the growth economies in Asia, we never went into recession in the last 2 years. And our GDP is on track for 3.25% growth for this financial year. Our unemployment is below 5% so far this year, and our inflation is within what we regard as an acceptable band of 2.75 to 3%. Australia has been fortunate in the global financial crisis to have such a strong economic relationship with Asian economies. The 4 largest export destinations for Australia are China and Japan, India and South Korea, and Singapore, Taiwan and Thailand are in our top 10 export destinations. We recognise, however, that there are asset price pressures and inflationary pressures. In our own economy, Australia, we have good growth and we have diminishing spare capacity. We do have an increased significant capital inflows, and our economy is appreciated. In 08-09, our dollar on American terms was 0.75 or 75 cents US for our dollar. It's now averaging at 95 cents. So we're seeing our currency appreciate in the last 2 to 3 years, something in the order of 30%. So we see that our challenges are somewhat equivalent to some of the emerging economies throughout Asia. We're now in our 20th year of positive GDP growth, and it has underpinned high and steadily increasing incomes and of course generated jobs. We think that growth will see a high rate of return on investment, with mining boom underway and deep and capital liquid markets as supporting our economy. We see our challenges going through as developing the skills of our workforce, and increasing the national compulsory savings pool or pension funds of our economy. We also recognise that there's a need for overdue investment in our physical infrastructure, roads, rails and ports, and a national broadband network. We recognise, however, that Australia's experience is only modest compared with some of the nations and some of the economies represented here. In conclusion, we see that the lessons for Australia going forward might be unique to Australia, but we see the rise of Asia, the rise of China and India and other Asian economies as being fundamental to the success of Australia's future. But we would wish to register that we are more than just a story of mining and commodities, and that we think that our flexible economy is a strategy which will bear our economy provided with the resilience it needs for the next coming years. Thank you.
It was a fine stage for Mr. Shorten to stride, and stride he did, giving rise to criticism from Australians in the audience that on the one hand he had reinforced the image of Australia as a somewhat parochial country, and on the other had failed to seize the opportunity to point to natural disasters such as the flooding in Queensland and Victoria, and the significant economic effects they would have on Australia's economy and its trading partners. The Cross-Border and Regional Investment Opportunities panel bought some solid forum material from the two speakers most likely to sell their own source, but in fact who didn't, and instead lent the weight of their considerable experience to the topic. Standard Chartered Chairman John Peace sees a new supercycle characterised by what he calls the 3 Cs.
We see 3 fundamental trends which we believe will continue to affect future global investment opportunities. The first of these is the shift of global economic and financial power from west to east. Indeed, we believe that the world has embarked on a new supercycle. The world economy is twice the size it was a decade ago and is already above its pre-recession peak. And I'll comment further on that in a moment. The second trend is the emergence of new trade and investment corridors. And the third is that there will be significant opportunities embedded in this new global paradigm. The winners will be those economies with either cash, commodities, or creativity. In other words, the 3 Cs.
And Fidelity Investments President Anthony Bolton endorsed the value-add service industries as the sustainable trends in China.
I think the trends this year are going to be very much a replay of the trends of last year. So I see money continuing to flow from investors in the developed world into emerging markets and into particularly this region, Hong Kong and China. But I think that they will accelerate this year. So I think that the flows will pick up. And I think that has big implications. I'm strongly a believer that the driver of Chinese growth is changing. It was about exports, it was about low-value manufacturing. China was the manufacturing base for the world. I think the Chinese authorities see that this isn't sustainable, or they want to make themselves less reliable or reliant on the West, and particularly America. And therefore consumption and services are going to be the big growth areas over the next 5 to 10 years. I think that has very important investment implications about where you should be invested. And I think there's still big long-term upside in the service businesses in China in more value-added areas. And I'm less keen on companies that are big exporters that particularly low-value manufacturing.
This event is only in its 4th year, but the Asia Financial Forum needs to offer more fresh meat on its bones, because it does deserve to emerge as a significant forum in what Anthony Bolton describes as the new supercycle.